Hello guys, welcome to my weekly mentoring videos once again. Today is July 6th, 2020, and we will have a fantastic session. I promise you will like it. But first of all, before we move, I need to show you this disclaimer here. Remember, we're doing this just for education purposes, right? I'm not recommending anything. And you are responsible for the trades that you're making. If you decide to copy this or whatever I'm doing in my portfolio to your own portfolio, it's on your own risk. I have nothing to do with it. The only purpose of this video is to educate you. Therefore, we're always trading on paper here. Okay, so just remember that, and don't blame me if you fail. All right, I'm not doing this to give you advice. I'm giving this to you because I want you to learn how to trade and practice on paper before you go to your live accounts, and you're really always responsible for all your decisions. Okay, that's very quick. Read this. If you need more time to read. But we'll move on to my daily routine. But first of all, we'll have a look at the market. What's going on with S&P 500. Let me just bring this quickly here in the frame so we all can see it nicely. This is good, and maybe a little bit fit from down. Oh, it's all right. So first of all, let's go and see. So you can see already, like, just have a look at the portfolio, what's going on. I'm pretty well beta weighted, as you can see. The delta, or delta hedged, let's say, delta is very close to zero. This is quite amazing, meaning the portfolio is very, very neutral, independent, more or less, on the moves of S&P 500. On the other hand, what you can see also, that my theta is pretty high, meaning that I'm making quite a bit of points or dollars per day without really worrying about price changes. And this is fantastic, you know. If you can achieve something like this in your portfolio, it's amazing. We can also see that the portfolio is up since for all these positions were opened by around 2.3K, and today income was quite high. Yeah, so overall we're doing very good, and we'll go on and move on and analyze all those positions. Maybe not all, some of the most interesting ones. I don't want to waste too much time on this because you've seen some of those in the previous video. But let's see what's going on the market first. So let's move there and see the charts. SPY, let's load this. This is minutely chart I was observing today. Well, as you can see, we are having a bullish movement here. We're well up, have had a little gap in here even, so this looks like we're back in the game. It looks like a little cup and handle, I would say. So it looks like we're bullish here, and we may end up testing again this 320 zone. Of course, I don't know that. That's what I see on the chart. We're way above the 20-day moving average, and we're about to have a cross between 50 and 200. That's a very bullish sign, and that's what I see. So market looks strong. That's on the first view of S&P 500. Let's have a look what's going on with VIX as well. So VIX looks like it's down a little bit, so there is like less fear on the market. Still, it tested this 200 moving average here and came back up, so meaning the market is still a bit spooked, but people are generally feeling quite much better than a couple days ago or a week ago about the craziness of the market. Still, you can see a lot of volatility there, things moving up and down quite quickly. If you especially look at this daily minutely chart here, what happened today in the morning, you know, you see like huge swings, and you know, now it's stabilized a little bit after the first hour and a half of trading. So VIX looks all right. Yeah, before I move on, let's continue the routine and look at some news and economic calendars, see what's moving the market. So let me bring that back down a little bit so we see everything. So I'm going to switch to briefing.com and just see what is moving the market. Just refresh this quickly, maybe get the latest data. So you see, I'm not really reading all these articles here. Tesla shares raise higher. Looks like Tesla is doing good. I see just the bold fonts. Looks like the markets are up. So I see the green colors. Tesla is going crazy. 1.3K. I think it's quite insane. By the way, I'm not touching this, like on my live account or anywhere. This thing is too volatile, too crazy, too overpriced, and simply there is too many speculators around that stock, so I'm not touching this. Apple looking great, Amazon looking great, Microsoft looks like technology stocks are doing well as well, especially if you see here comparing Dow, Nasdaq, and S&P. Nasdaq, which is mostly technology stocks, is doing best. And so what do we watch? Strong financial sector, consumer discretionary, and IT, of course, technology. Weak utilities and consumer staples. So what's going on? Stocks rally in broad-based advance led by the cyclical sectors. Chinese state media suggested fostering a bull market should be a priority for the Chinese economy. So it looks like a little bit more fighting and buying and boosting the markets, people going into trading more and more. I actually looked up this article on which site? On Zero Hedge, where they talk about a little bit about what's going on. Robinhood envy China tells its population to flood into stocks. So it basically means a bubble. We're blowing a bubble. You need to be aware of this. There is a little bit like bubble going on, not even a little bit right now. Stocks are highly overpriced for the market situation. Remember, we have COVID and it didn't go away, and there were businesses closed for many weeks, months even. People were unemployed, and stock markets reached the new highs. So this speaks by itself. So you see a little bit of stuff going on in China, and they're talking here about how the market is in a big bubble right now, and I find this really hilarious here. Yeah, everybody's basically trading now. So you can see it's flooded with amateurs, and these are the guys which are basically pushing stocks like Tesla up. I don't want to touch this stuff, even though maybe short term it may mean a little bit of gains, long term, or unexpected one day it can just drop to zero, and it's really difficult to hedge or basically against it. So then non-manufacturing indexes like mining, utilities, I think stocks for June is expansionary, and we'll see that also in the calendar. Yeah, I don't know about that one. So let's move to calendar and see what's up for this week. Quickly refresh this. So we are here in the weeks July 6th. Yeah, so just an hour ago, more or less, or an hour and a half, they announced the new non-manufacturing PMIs. And what you can see here, basically, that that's the same thing that we read on the briefing.com. You can see that the numbers are much higher, and looks like everything is, the forecasts are good, and we're doing like companies like mining stocks are doing good. So there is what they say here is we're basically returning into expansionary territory. That's what they say. I'm not so sure about that, but yeah, that were the numbers that were driving the market today. So yeah, I guess the market is high also because of this. Is there something new coming on tomorrow? No. Wednesday, I don't see any red boxes. What I see is just the weekly unemployment claims, but they don't really drive the market so much as they used to. That used to be like red. Now it's yellow or orange. What we can see is still the same chart I showed like last time. Well, the claims are dropping and kind of stabilized here, but it's still, the new are reported, and it's a little even growth here. So for me, it's a warning sign that things are not well yet. I mean that people still are getting unemployed, and there is no velocity of money. And basically, if people are unemployed, They will spend less. There is Corona, so they will also spend time at home and watching TV and Netflix and whatever, jerking off. But but basically, yeah, this is not a good. That's not a good number here, and still it doesn't drive the market so much. But you need to be aware of this. This is a warning sign. So after looking at that, we have like a broad picture of more or less what's going on this week. Is there something going to be happening next week? Well, yeah, there will be monetary policy statements in Europe, so Europe numbers popping up. We're not going to worry so much about this in this mentoring session. We'll look at this calendar next week on Monday and adapt our positions according to all this. For now, just to have a look, that there will be some stuff going on next week. Let's move on to FinVis and see the map of S&P 500, basically of what's going on in the markets. Markets are up, as you can see. Dow not so much, but as a Nasdaq really uptrend, S&P, and you can see here who's doing really good. So these are technology stocks, communication, consumer cyclical, and the rest is like following, and these are the best performing ones. So just quick overview. Then I usually jump into the news and just read the news, but we already looked at them. If I see something more interesting, just on the first, glance, and I don't really see anything. There is some stuff to analyze maybe later. Something about Lemon. What are they talking about? This Nike, whatever. Maybe people start buying shoes again. I don't know. Important to have a look at these also, like the fresh news. Now let's move on to the groups and see what's going on in today on the sector, let's say, sorted by sectors. So we can see consumer cyclical, technology, and communication doing very well today. Financial following. Healthcare also not so bad. Weak performance, again, consumer cyclical. Communication and technology, so they seem to be staying there together, three of them. Technology, consumer cyclical, communication services, 1 month performance. So guess what we're going to be trading, if we're going to be trading. One of these, would be candidates for bullish. Markets are bullish, therefore we're looking for bullish candidates. And these sectors will be interesting for us, right? I also like to look at the maps again and see what's going on. If I look at the 1 month performance just on a broad picture, on the map, and see maybe some companies popping up as interesting, like Netflix, is going up like crazy, Amazon, Microsoft, Apple, of course, Oracle seems to be breaking out. You can just do this and see if you can find some potential candidates for condors or some cash flow trades or speculation. I do this quite often, just scan around and see, search like Pepsi, looks like it's standing still. Looks like a good candidate for a condor maybe. Just scanning and checking this little charts there is a very useful thing to do in the morning on Mondays. And one more thing that I usually check also is the earnings. So we're gonna be getting into earnings season. So as you can see, there is like before earnings is this pinky, light pink color, which means that basically it's less than 15 days until earnings announcements. We need to keep that in mind, especially when we're trading, the cash flow positions for longer term. When the earnings happen, and I don't expect really great earnings, upcoming earnings for many companies, usually the price jumps up or goes down. Very rarely, or sometimes it happens that not the price doesn't move, but usually it does, and it's quite unexpected what will happen. So when we're selling long-term contracts, we need to be careful not to go over that date. It's better if the contracts expire before earnings are announced, and then get into another trade after earnings. There are, of course, strategies which we talk about in our 12-week program, which you can use to actually benefit from the earnings announcements, like straddles and strangles, and we can use them. But I generally don't do that in my portfolio. I don't like this play in the game, so I'm showing here to you how I'm trading. Sometimes I would, if I hear some news like, oh yeah, these guys like whatever, Facebook, you know, it's just they had amazing year, or maybe Netflix, and then therefore it may go up like crazy after earnings, or down because I don't know something. Then it would, I mean, I would play it, but usually I don't play that game. So I'm just looking if, okay, which companies are getting into the earnings zone, and I see there is many, so I need to watch it when I'm planning my trades. Yeah, so that's it for the FinViz. So let's move to Thinkorswim and see what we can, let's see our positions first. So what's going on in the monitor page? We're doing pretty well. Look, this this is amazing actually. My delta just got very close to zero. So you know, soon probably is gonna go bearish. But that means basically I have like on 1 point of movement of SPY. Now it's like zero. I don't like value of the delta over the entire portfolio doesn't move. So it's fantastic. I'm just getting that cash per day. So, but anyhow, let's go to the Analyze tab and just go position by position, and just quickly see how we're performing. So I will skip those future contracts here. Just go directly to Apple. We can see that this is you know, short put spread. It's max gains. I'm gonna leave it here because it just have 4 days until expiry. AU, same thing. Will expire, you know, it's almost max gains. AVGO, same thing. Caterpillar, same thing. Really good place to be. Cisco, max gains. Facebook, that's our butterfly. And you see, actually, Facebook moved quite a bit today, and we are running into a nice profit. You know, right now it's just $50, but with potential to go to 200. On this this butterfly, broken wing butterfly, it costed me basically $300 to build it, with having max gain if we stay around this 235-ish area, max gain around $700. But even if we run to the infinity, to the, you know, with the price going up to the infinity, we're just getting closer to our $200, and that was actually my goal. I wanted to at least get $200 from it and have a positive theta, which means now in this butterfly, every day brings me closer to this blue line. And so this is really working nice for me. I'm just gonna keep it there. FFIV, well, again, you can see I'm trading a lot of short puts right now because premiums are quite high due to high VIX, and I'm just benefiting from that. So I'm using that, and there are, you know, very like many possibilities to manage this kind of trades, so which I know, so I'm not really afraid, and my portfolio is beta weighted, so it's fantastic. Gold, it's a new trade that I entered today, and actually I wanted to talk about this a little bit more. Gold is a mining company, you know, so these are the gold diggers. They get gold out of the ground. Gold these days is actually has entered a very strong bullish market. It's like, as you can see here, MGC, that's gold futures, it's basically selling for almost 1800 bucks, and it moved very strongly, and especially in situations like right now, crisis situations or situations where we have a lot of fear and the markets can go down, gold is an amazing hedge. So people invest into that, and naturally we also have Fed printing a lot of currency, and you know, the currency is just a measurement unit, right, of the goods and services that have value. Gold is a true money, and the more gold cannot be printed, it can be mined, but you know, the mining costs cash and it has to be digged out, it costs work. You know, it's like an asset more or less which has value. Paper can just be printed for nothing. These days we actually just put digits into the computers, right? So it's like it's really nothing. So what I want to say is, in the crisis situations like this, gold tends to be up. It tends to be a very good hedge. And gold mining companies, if you look at the history back in the past, they performed very well in situations like that. When gold is going up, also the gold mining companies go up. And that's what I'm speculating here, and I would like to have some shares of that gold companies. If you look at the chart of gold, you can see that price chart, you can see that it pulled back a little bit, then it did a little cup and handle pattern like this. It's a daily chart. Then it kind of like tested this 50-day moving average, and right now we are getting closer to the point where this 20-day moving average is gonna cross 50 at this point, or somewhere maybe here. And cup and handle patterns are bullish patterns, which indicate a strong up movement. They're quite reliable, and as you can see, this thing has just reached the point of getting into the strong zone where the support is very strong. It's supported by 50-day moving average, 20-day moving average, and 200-day moving average is way down there, but it's going up. So what I'm speculating here, I think this is going to reach at least 28, if not even go higher. So, but there is also a possibility that this thing may pull back a little bit, and this is what I'm counting for. Maybe retest this area of support. It's very unlikely, but if it happens, I don't mind it. So my idea here with this trade was to maybe acquire this gold at price of 24.50. If this happens, that would be fantastic. Markets are volatile. It is possible, surely. Gold is swinging up and down a little bit. S&P 500 going up like crazy, which may reduce a little bit prices of gold, although they're rising kind of together now and falling together. But yeah, things may happen in this crazy market. So I said, well, I don't mind if I would get 24.50 gold stock, so I'm just going to sell a put on it. And if I get assigned, fantastic, I'm just going to keep it and start selling calls. If not, my plan is to just collect the premium, and the premium was quite fat. As you can see, 350 bucks I can make on it, and the time in this trade is very short. It's just 18 days. So in 18 days I'm getting 350 bucks. That's basically like a little bit more than 2 weeks of time. Fantastic. I just love that trade, and I would really like to get this gold mining stock. Let's move on. Next one on the list is technology, Intel. Okay, this is short put spread, nothing, it's winning, so nothing to talk about. Then we move on to J&J. It's an iron condor, which is also performing very good. I'm just gonna keep it here. How many days until expiry? 11 days. Fantastic. I'm just gonna stay there. How is the chart looking like? It's got a little bit bullish, but let's look at it from the perspective of the iron condor. I'm just gonna set slices to expiry, and I'm going to put them on the chart. All right, so we have plenty of room to move, and there is a strong resistance zone here, and maybe even here the 50 moving average. So I feel pretty good about this. Let's just keep it and move on. No need to do anything with this trade. KDP max win on Condor. KGC looks like a short put simply. Also winning now, but there is a movement. This is also a gold mining company. I would also not mind to have it at the price of what is this? I sold 650s. Right now it's 7 something, 722s. Would be fantastic to have it, but okay, I guess I'm gonna get the premium. I'm gonna be also satisfied with this. KHC right in the middle of the Condor, fantastic trade. Looks like I'm going to get my $380 soon. When does this expire? KHC 11 days. Oh, well, I'm not really worried about this trade. Coca-Cola, this is a really weird pink line, don't watch it. Looks like we are inside of the Condor. Probability of expiring outside of it is low. I'm happy. I would be also happy to get the Coca-Cola shares, but I'm going to be satisfied as well to keep the premiums. So I'm staying within this trade, not managing it. Nothing to do with Kroger. Newmont Mining. Okay, this is an interesting one. We talked about this also last week. I have sold 10 puts on it, so it's a short put position. to collect some premium, which is 500 bucks, and then I bought a very long-term call because I also think that Newmont, which is a gold mining company, is gonna go up. So I want to profit from that position to like go and move up high sometime in the future as the gold maybe crosses 1800 and goes up. Well, this costed me 485 bucks, but you can see that I paid for it with this. So this one gave me 500 bucks, this costed me 485, so I actually am 15 bucks plus on this when this expires, and I can keep my call for free. So it's fantastic trade, and maybe I can also sell another call a bit higher out of the money to collect even more premium. But for now, I'm just gonna keep it like that. Let's just see, when does my short position, 11 days my short position expires. Great. That's fantastic. Let's move to next one, Oracle. Nothing to do there. Short position, short put. Another butterfly on pizza. This is working for me very well. Has very high up potential. Right now, if I was to move to the 90s, I would be at max gain at this position, but I won't, and I'm still here, and this is fantastic because I get a very high theta from that, and a high potential of a big income. So max win on this trade is $3,000, max loss 1.8, but I'm of course managing it, and you know, I don't think that pizza will be stopped being eaten. Right now we're winning around 160 bucks. I want this stock price to go up in price to reach around 85-ish, 87-ish, and just give it some time for the pink line to go a little bit up for me. If it ends up in the 90 zone, I may exit this trade. Silver, max win almost. SPY, it's our insurance, so we're losing on it, but it's a cautious loss. Target is a little bit of a losing trade right now, but it's not hurting me much. Why is it losing? Well, we're making money on short call, but the long call position is actually in a loss, and I'm also betting the target's gonna go up. So looking at the chart price chart, we're above this 50 average. It moved a little bit below the 20 days, but I still think it can easily reach and come back to the higher levels. We have had one bounce of the support here, second bounce. It bounced off the 50 moving average. I think it's a bullish candidate, so I'm still gonna keep it here. Then we move on, position on work. This is actually not winning, another losing trade. I sold 10 puts on it, and these are max win, which making max $300. However, I'm losing on a long call, which was costing me 920, and I'm already, you know, losing like around 400 bucks. So I'm making 300, I'm losing 400 on this one, and because I have two of those, it's 920. I may need to look into this, so I'm gonna just look at the chart, and see what's going on with the work. Well, I had an alert set up here at the level of 30, but it looks like it bounced of it, and now it reached the resistance of the 50-day moving average, but it's basically been bullish today. So I'm not exiting, I'm not worried. I think it's gonna come back. It's similar to the stock that we analyzed before with the target. It's coming back down. It touched like support zone once, twice. It has this big gap to fill, and you know what happens with the stocks, usually they fill their gap, price gap. This between months must be filled. So basically what I'm expecting is it's gonna go up, maybe wiggle a little bit in here, and then break that resistance zone and fill the gap, maybe up to this level of 38. So I'm still okay, I'm not panicking, I'm going to stay within this trade for a while. The loss is not too big, so I'm okay. Coming back to risk profile, another new trade that I entered is, and I need to talk about to you, is this ExxonMobil. So I entered a put with a little bit more risk involved in there, so I run into kind of like a risk of assignment. It's not a big risk, as you can see, it's 21% or something of falling below 40. However, I usually would be, if I wanted to collect a premium, I usually be having this number around 15 or 10 even, but now it's 20. Why did I take that additional risk, and why would I trade ExxonMobil? As you know, ExxonMobil is an energy stock. It's an oil company. It's like the major one. And it's not been performing well. It's like in this channel, you see the oil dropped significantly, then it came back up. And the price of ExxonMobil, was basically stable. It never recovered to its highs of 70s, something like that, 70 even higher. It's still at the levels of 40s. So to me, it's kind of like underpriced. People won't stop using oil. We use it in industries like mining and all over the place. It's not just cars and planes. It's oil is all over the place, so it's not going anywhere. But what is good about this company is, even if it moves like a little bit here, wiggles around, we could collect some premium. But what is good about this company is that they pay an amazing dividends. And just to show you what it is, what is the dividend here, that's a little bit not visible here, not so much, but basically this says 0.87 dividend level and paid quarterly on a stock which is worth $40 or $45. Well, that's around 7% rate of return yearly. And to show you and illustrate this to you, I can go here to dividend.com. I prepared already this site. You can see it's ExxonMobil. I did a little bit of analysis and I saw, okay, what is the dividend yield? 7.85% on my investment. So every year I'll be collecting $343 if I have this times 100, because I have 100 shares. That gives me $300, $343 a year. Imagine having 10 of those. That's 10 contracts or 1,000 shares. That brings that number to 3,400. It's pretty cool. It's a pretty cool trade or stock to have. Also, what is interesting is the consecutive years of dividend increase is 13 years. So for 13 years, they never reduced that dividend. They were actually only increasing it. Okay, they pay it quarterly, and I think it's a fantastic stock to have. It's like not very pricey right now, and it can actually have an amazing rate of return. You don't get that at any bank. Okay, even if the stock goes down a little bit, they're still going to be paying dividend. Why? Because of this number. So we could play a little bit of a game of fundamental investors or investors that actually are income investors and get that stock. At the moment I'm just playing with it to either collect a premium or get it, but maybe in the later videos I will just simply get it, kind of sell a put very close to being at the money and get that stock assigned. And then we will see how this dividend increases the value of my portfolio every quarter. So that was the reason why I chose this, and now we're in this trade, and that trade is working. Looks like Exxon is dropping a little bit today, and I would like it to reach the level of around here, 40. 40 is where I'm gonna get assigned. If this happens, because there's also earnings coming, I'm expiring before the earnings. Like I told you, earnings is gonna be on the 31st, and my contract goes till 18 days to 24th. So it's gonna expire before earnings, but maybe the expectations of earnings gonna be low and the price will drop. And maybe I'll be able to collect this stock plus collect my premium. We will see what happens there. For now, it shows a loss because I sold these contracts a bit lower premium than it is right now. But the time will be basically bringing me closer to the blue line, and we will see if I collect the premium or I get also the stock. Zynga, we talked about this already before. It's a very simple trade. I think it's also short put. So it's also performing very well. So the portfolio in general looks fantastic, very neutral, generating quite a bit of cash flow, and also you can see that the gains are pretty cool for this week. And yeah, So at this point, I could be just leaving this portfolio going. I'm gonna be playing a little bit with maybe my hedges here, the futures, which I need to talk to you about maybe in one other video sometime later. Right now, this hedge is working pretty cool. I have a gold and S&P 500 micro futures, which are going with the delta negative. For me, that's causing this hedge portfolio to be like close to delta zero. I'm losing on this one, obviously, because markets were strong, but I'm okay with that. I want to keep my delta neutral. And this contract runs for another 74 days. This one is 24 days. I might be thinking of closing my gold and maybe purchasing new contracts for the next months. But for now, I'm all right with this, so I'm just going to keep those. Okay, so that's for the portfolio. But one thing that I really wanted to talk about to you today, like one topic that I wanted to mention, is exactly this, beta weighted portfolio, delta neutral portfolio. What does it mean on a risk chart? Because we've been used to basically displaying all these positions which I showed to you. We've been used to looking at the analyze tab, risk profile for every single position. But how would the risk profile look like for the entire portfolio? Wouldn't that be cool to see like how my entire portfolio would react to the changes of the ticker that I'm hedging against, that I'm beta weighting against? I think it would be fantastic because it would give you an overview of how your portfolio will react to the market going down significantly or going up significantly. So I will show you how to do that, and it's going to be a fantastic tool in your toolbox to better control your portfolio and have a better overview of your positions. How to do that? First of all, I'm going to go and stay here in the Analyze tab in the risk profile, and I'm going to put in here the name or ticker of my hedge, which I was hedging beta weighting against. It was SPY. So you can come back here, beta weighting against SPY, correct? Back to risk profile, SPY. Now I just see my SPY risk profile right now. So you can see I'm losing here. My insurance is actually losing me money because markets are strong. So, but I'm okay with that because I have a lot of other positions which make me money. And now I want to see how does my portfolio look against this hedge on a risk profile. So to do that, I'm gonna go down here in the positions and simulated trades, and I'm going to look at this box here, single symbol. For all positions are going to be analyzed, but by single symbol. I want to change that. I'm going to change this to say portfolio, beta weighted. I want to see the beta weighted portfolio. I press that button, and you see nothing happens here. Well, that's just because I have some positions which are not working with this risk profile, and these are my future positions, and I need to exclude those in order to generate that profile. I think it's a little bit issue on the side of Thinkorswim, but I don't mind that. Since these two positions are more or less eliminating themselves, with the gains, maybe not completely. And I know these are my hedges. I'm gonna look at my portfolio as if I didn't have any hedges. What would it mean for my portfolio if I didn't have both of these? My profile, my risk profile. So I'm gonna just untick those two, and here's what comes. This is my beta weighted portfolio without the hedges, without the future hedges. How does it look like? It looks like right now SPY is at the level of 316 or 316.46, and in my portfolio I can see that let's maybe bring this a little bit down for better visibility. I can see that if this S&P 500 was to drop 14 points or 16 points to the level of 300 at the expiry of all my contracts, I would still be making money, 219 bucks or 217 right now, around this. If it dropped below, it went to 290s, my entire portfolio would still make money until the point of around here, maybe to 299.10. So I don't want, with the current portfolio setup, I don't want this thing to drop below 290 to 300. That would hurt me. Start be painful to me. And you can see that also I'll be generating losses. Well, this is not entirely true since I have my hedges, but I can see like how my portfolio behaves without it. And I can see that it's actually pretty safe portfolio. On the other hand, if it would be going up, it would be all great up until the point where S&P 500 reaches, you know, around, what is this reaching, level of here more or less $350. So that's my profile. I can actually S&P 500, as long as it stays between 300 and 350, I'm awesome. I'm making money with my entire portfolio. If it goes below 300, I start losing. I need to be like really careful and maybe look more at my hedges and improve them. And on the other hand, if it goes too much up, it also starts hurting me. So I would have to be careful not to exceed 350 SPY and just watch. But as long as it stays in between, I'm all right. So I wake up in the morning and I see, okay, it's 320. Good, I'm making money. So that's something to do for you, you know, and play with. Just try to do this to your smaller portfolios and bigger portfolios if you build them, and see how, you know, your risk profile looks like for the entire thing. Isn't that awesome, by the way? It's a fantastic tool. So I'm going to go back and change that back to single symbol, and just to be ready for analysis of all the other positions. I hope you like it. And before we finish this one, let me just check one thing. Yeah, before we finish this one, I want to show you also something what I have created for you guys on the Option Mindful website. And this is optionmindful.com Academy. And this is going to be for you students to access some of the cool stuff or goodies that I will be creating for you and adding such things as these videos. This one is going to be available for you to watch for free on the group, because since this is like my second video, but I'm making a product out of it, and I will be publishing this type of videos every week for I don't know how long. And I would like to also like get some cash flow out of this. Of course, I'm not going to be charging crazy money because it's kind of like static thing. But I want to show you, and right now I'm just going to show you what I'm building, and so you can get familiar with this. All my students gonna be distributed login and a password to this area as soon as I'm finished with this, because this is still kind of like work in progress. So let's log in Johan. I'm gonna show you how Johan will see his things in the student or academy on the Option Mindful. So basically I just log in, and I'm just gonna, I hope I'm gonna log in, Johan, and then his password is something. So I'm logging in Johan logged in, and this is the student space, and here you will have a little bit of courses and areas which you can access. Johan has access to those too. Actually, he can also access mentoring videos right now. Since this is work in progress, I didn't protect this, but I'm going to show you all those three very quickly. So what is this price chart patterns area that in the student academy? Well, I've created a little bit of a help for you guys to identify chart patterns, and how I just created a bunch of patterns here which you can filter by bearish, bullish, and undecided. I mean, I didn't create the patterns, I created the images. This comes from the Bukowski's book. I don't remember the title exactly, but he identified like 48 or like many patterns which are quite reliable. You can read the details about them. So I stole this idea from him, with the exception that I improved it a little bit, so I can just sort them out and see and look at them the way I want. Like if I see bullish markets, I can just filter this out and press bullish, and then load the patterns which are bullish, and then just look at them, memorize them, and see if I see them on the charts. So for example, we've seen this little cup and handle. We've seen this is like a these are like the W patterns. They actually called differently than W's, but let's say I'm going to load this one. And this is a double bottom Adam and Eve. I call it W because it's just, you know, it generates something like a W. It's called, in my opinion, it should be called W for win. It's very reliable pattern. Sometimes it breaks out, comes back down, tests the support, and then goes up. But here you can just look at those patterns and in this area, and you can just see if you know, the more you look at them, the more you remember them, and the more you see them on the real price charts and Thinkorswim. So just have a look. You will have access to all that. That's actually not paid. It's just like a part which I'm gonna just making for free to you if you're my student. And we go back to Academy. Another one will be Discover Option Trading. So this is basically, it's empty right now, but this will be the materials that you studied with me, like the slides from 12-week program. And you know, these slides, I recorded them with audio, so you will have access to all the lectures with my audio in there, and you will simply also have something like here, like sortable videos, which you can watch on your time and schedule. And for my students, this is going to be also for free. The only thing that is going to be with a little fee will be these videos. So weekly mentoring videos, and you enter that and you can see a session from June 29th that I recorded before. This is going to be the second session. I'm going to add it here, and I'm going to just keep adding more and more sessions as I go trading. And basically when you sign up, you will have access to this and you will be able to watch these videos here. Yeah, so that's just this little Option Mindful Academy thing that I will invite you to. And probably like next week, you should be already getting logins and passwords from me. I will share them on Google Drive, and you'll be able to access all this yeah, for whatever you choose to. I will be adding also other stuff to this student space, like PDFs with important informations and maybe other chart patterns, or you know, candlestick patterns, any support materials that could be useful for you. Also some random videos, not weekly mentoring videos, will be coming over here. So this is growing. We'll see where it goes, and I hope that you would like it. So that's basically it, guys, for today. I hope you like this mentoring videos, and they bring something useful for you, you know, some new knowledge. Let me know if you see some improvement potential or have some comments. Until next week.